It's still thinking here.
There we go.
There we are. Hi, good morning. This is Anthony Parent. Thank you for so much joining us today. Today is Monday, July 8th, and we are going to have a conversation today because if you watch this channel, you know one thing. We're not a big fan of the U.S. tax system, and especially not a fan of the U.S. tax system as it applies to people abroad. We find it to be incredibly onerous, full of complications. My firm does it, and we have to charge an awful lot of money to get things done right. It's really, really obnoxious. We can't stand it. We want to upend the whole world. My good friend Keith Redmond's on the call, and he's with us. And so but here's the thing. We want to make sure that we don't believe our own BS, as it would. We want to make sure we get outside perspectives. And, also what we want to do is make sure we're spreading the word about what is actually going on. So with us today, we have a fantastic guest today, Michael Scranton. And Michael Scranton is an American in Argentina. He has generously offered his time today for us, and he's wanted to explain his perspective about what he thinks the U.S. tax system is for overseas. And I believe is his claim is it's not all that bad. So we're going to allow him to explain his case, a little bit about his background. But first, Michael, if you don't mind, I would love to talk a little bit about your background. And also a little bit about what's going on in Argentina. As you know, one of the things I've learned is don't listen to the headlines. If you have a buddy in that country, it's always better to contact that buddy to say, hey, what's really going on? Because we get, and so so I just wanted to ask you, thank you for joining us, Michael. Now tell us a little bit about you, about yourself. Where are you from, and what precipitated your move to Argentina?
Yeah, awesome. Thanks for the intro. Thanks for having me. So name's Michael Scranton. I'm from Dayton, Ohio, actually. So good Midwestern guy. I've been here in Argentina since 2008. Initially came down here through a study abroad with university. Came down here, liked it, and decided to take a risk and just, see what would happen. And that's, 16 years on. So, I've done my schooling down here. I've formed family down here. I work down here. It's pretty well installed. It'll actually be in 3 years. I will have spent as much time here in Argentina as I spent growing up in the U.S. So
wow. Now, do you have plans to come back to the U.S.? Do you have plans to renounce your citizenship? What are your feelings about that? Where the future may be?
Yeah, so I'll never renounce my citizenship because my family is there in the U.S. I have my daughter as well. My daughter, as soon as she was born, we went to the embassy, got her citizenship as well. But as far as coming back to the U.S., that's a more complicated thing. I'm actually divorced from my daughter's mom, and so she's down here. She's Argentine. She's not U.S. She doesn't have U.S. citizenship. She doesn't have green card or anything like that. So just being close to my daughter, I think, is a big driver for me. Now, once she's 18, if she decides that she wants to go and live in the U.S. and go to school there, more than happy to go with her and be there and install myself back in the U.S. at that time. But at least for the time being, I don't think that's really in the cards. Now, for her, if she ever wants to give her citizenship to her kids, she has to spend, I think, at least 7 years in the U.S. If I'm not mistaken, there's a period of time that she has to spend and document that she was actually completely in the U.S. Nonstop in order for her to then transmit it down to her kids. But we'll see what happens there.
All right. So for you right now, it seems like a pretty ideal situation. You're living and working in a country that you seem to really enjoy, right? You enjoy being in Argentina?
Oh yeah. I mean, at the end of the day, everybody gets to choose what the measuring stick is for quality of life for them. I just found that Argentina was a better fit for what I consider to be quality of life.
Right on. All right, fantastic. And now, so you are now in tech. Your positions in. Yep. Okay. And what does your job entail there? Who do you deal with? And
so I sell software services, nearshore software services from all across Latin America. The majority of our client base at the moment are other Latin American companies, large multinationals here in Latin America, but we're growing and moving into the U.S. market to start offering those services to the U.S. companies as well.
Right.
So you're
like DPs.
I'm sorry to interrupt. So you're a salaried employee of an Argentinian company based?
No. So my salary comes through the LLC. So Argentina's, one, I'm expensive. And two, Argentina, we only use the Argentina entity for companies in Argentina, just for a question of the structural issues that you have here right now, principally accessing foreign currency. That's a huge issue in Argentina right now. So pretty much any contract that we do that is not Argentina, we are either using the in-country entities that we have set up, like in Chile, Uruguay, Peru, Colombia, Mexico, or we're using the US entity.
So when you say an LLC, do you mean an LLC in the United States or the equivalent in Argentina?
No, so we have a company set up in Florida as an LLC, and then we have entities set up in each of the other countries as well, and then we have a holding company that's set up over in Europe. So,
and just to clarify, it's the LLC, the Florida LLC that pays you.
Yeah.
Okay, great. Thank you. Thanks
yeah,
for that.
So Florida LLC pays me, and my contract is as a contractor with the Florida LLC.
Great. I do just want to turn over the conversation now to Keith. Keith, just thank you so much for suggesting this today. Keith is our resident consulate to and advocate for Americans overseas. Keith is living temporarily in Washington D.C. Typically, he's in France right now. And his work and his group kind of all has one rallying cry, right? I mean, what's the rallying cry of your entire American overseas group, Keith? What's the point of it?
Yeah, well, and it's the group and also the people with whom I deal are literally around the world. And the rallying cry is to fully support residency-based taxation and not citizenship-based taxation, which the U.S. currently practices. And what I mean by residency-based taxation is that the U.S. severs its citizenship from tax residency. So that way it's not imposing its tax code outside the U.S. on tax residents of other countries. And so I deal with a lot of people who are American immigrants with an E who have permanently live outside the United States, whether they did live at some point in the United States and then moved outside, or they have never lived in the United States, but they have U.S. citizenship. That's one group. Another group are accidental Americans who may have been born, let's say, in the U.S. to, let's say, French parents, but left literally in diapers back to France, but they're still obliged to participate or to file tax filings moving forward because they are technically U.S. citizens. So it creates a major problem and difficulty in navigating two incongruent tax systems. So what intrigued me, Michael, with the exchange on Twitter was that what I gleaned, and certainly correct me if I'm wrong, is that your position or your situation is not difficult under the current U.S. tax regime of citizenship-based taxation. And I do want to thank you for accepting our invitation to come on to talk about our different perspectives. Am I correct in my understanding?
Yeah, I mean, my opinion is, so filing your federal taxes overseas, if you're an expat, you're basically just going to be paying, anything over, I think it's like 120 right now, right? And you're going to pay a marginal return on any amount that's over that minimum base, which is much higher than where it would be in the U.S. Now, it sucks that you have to do double taxation, right? Because you still have to pay taxes in the country where you're at. I agree with that. On the Twitter thread, though, the Twitter thread that kind of sparked all of this off was around, I don't know if this was on the 4th or just before the 4th, but essentially it was a thread that tried equating taxation to freedom in some way, shape, or form.
Correct.
And yeah. Exactly. And my position for that is one that is an absolutely ludicrous position to have. Taxation and freedom are completely separate concepts. And if you want to say that minimal taxation is analogous to maximally free, then you would also have to say that some place with zero tax is maximally free. If you look at a list of countries across the world as far as what their taxes are, the lowest taxes in the world are generally in like UAE, Saudi Arabia, places like that. And I don't think we would necessarily consider those countries as maximally free. Further, if you wanted to go to the absolute extreme case, communism doesn't have any taxation.
North Korea is tax-free, right? North Korea doesn't have any.
Exactly. And I don't think that we would actually consider them as free countries.
Yeah.
So I don't see that as any way to actually, credibly sustain a position regarding freedom. Now, if you're asking, would I prefer lower taxes or higher taxes? Absolutely. I don't think the government is particularly competent at what they do. But I would absolutely prefer lower taxation to higher taxation. The concept under that thread, and what really I think got people riled, is at the end of the day, you have choices. Like as an expat, you can renounce your citizenship, adopt a different citizenship and a different kind of tax environment. For example, Paraguay has a 10% tax. You could easily do that, and it's very easy to get your residency and set things up and declare that as your tax residency in Paraguay. It's 10%. Now, it also has trade-offs. It's very difficult to get your money out of Paraguay once you get it into Paraguay. But once you're there, you can do plenty of things that you want. It's just a question of trade-offs, right? At the end of the day, are you willing to do that trade-off? If you're not, well, then that's your choice. But you do have other options that are at your disposal at the end of the day.
All right. Well, all right. Thank you for that. And we'll get into that a little bit more. Now, I just want to get back to, I want to introduce the great John Richardson. He just hopped on. John, thank you so much for joining us today. And we're going to be talking on Wednesday. We're going to have a podcast. We're going to be talking about why citizenship-based taxation needs to be severed from residency-based taxation. But welcome. And could you just give a few examples of problems with citizenship-based taxation that really can't be resolved in the typical ways, the problems, why it's not a great deal. And we're going to, and by the way, Michael, I do appreciate your distinction of where you're coming from. And it sounds very interesting. And I want to get back to you on that. But John, if you just give us some basic problems that we have with citizenship-based taxation. And again, good morning to you, friend.
Well, Michael, see, I came on late and I apologize for that. But what I'm understanding is that your salary is coming from a U.S. company, essentially a U.S. LLC. Is that correct?
Hmm.
Yeah. How do you? I mean, I'm not asking you to get into your personal details in any particularity, or certainly any more than you want to. But are you trying to do retirement planning and financial planning and stuff like that? I mean, I thought I heard you have a daughter, so I would expect you probably are.
Yeah, I do, but within the context of Latin America, and this is actually probably more interesting. It's not in the sense of the U.S. of trying to do like a Roth IRA or set those kinds of things up. I'm much more about buying property, building things that generate income, generate value, can be passed down, and have stream of income created for my daughter that way. You can do financial vehicle investments if you want in Latin America. It's just a lot more volatility. So you have the Merval, for example, here in Argentina. You could very easily invest in that if you wanted. You could also access investing in stocks in the US if you so chose through vehicles that are called ADRs, which basically replicate exchange traded stocks in the US, but they make it available to people outside of the US with that as well. There's a lot of different ways you could do it, but specifically in my case, I don't go the Social Security route. I don't plan on the Social Security route. I don't think it'll be around. I don't think the math makes any sense on that. And I don't do like the Roth IRA side. I try and do more of building wealth the old-fashioned way, if you will.
So you're sort of what you would include. It would include, but not necessarily limited to, real estate investing and stuff. Would that be?
Yeah, among other things.
Okay. All right.
Well, then I could just ask a follow-up on that. Do you have any investments in Latin America right now?
Yes.
And now, are any of these investments owned by a limited liability entity, or are they owned by you personally?
Me personally, within those specific countries.
Okay.
All right.
So
what
I have multiple residencies. I will say that.
So actually, Argentina is great. I was actually there for a couple of weeks in the fall, but So what you're not doing, I mean, I don't even know to what extent the stuff is available there, but what you're definitely not doing is trying to use, sort of, you pay tax in Argentina, obviously, right?
No.
Okay. So you're not using any sort of tax favored entities and that under Argentina tax rules, right?
No.
Yeah. So, this is, kind of what I figured. And this is, I think, what is the fault line between what, I mean, it's very early and premature to, try to categorize your situation. So, Michael, I apologize if I'm simplifying in that. But, this seems to me to be the fault line between Michael's view of this, which seems to me to be entirely rational, given, the life that you're carving out, and the view of, immigrants, U.S. immigrants, for example, in these high tax first world democracies, right? Like say the UK or France or, Canada, this sort of stuff, right? Where so much of their, retirement planning and that is tied into the tax legislation, of those countries. Now, granted, people don't have to participate in that kind of stuff. I mean, everybody in the world is free to manage their retirement planning, investment life, what have you, as they want to. And what Michael has done, and I think this is an instructive lesson for, at least I think what you've done. Jump in if you feel I'm in any way mischaracterizing.
Hey, if you're making me look better than I am, I'm gonna shut up.
I'm just kind of looking at you through the screen, and this is what I think I'm seeing, right? But so there's really three things that a U.S. citizen living outside the United States can do without getting into a bunch of trouble, be it excessive reporting, fine, what have you, right? So interestingly, the first is real estate investments. Okay, without a doubt. So, you see this all the time, right? So, for Americans abroad, if they invest in real estate, big property, small property, they own it themselves. That's an important thing, right? And that's what you
That
say.
right there is the key. That's the key.
So that's all good. Okay, that's all manageable.
Mm-hmm.
For a number of reasons. It avoids any of these sort of pooled investment type things that we'll get to in a second. But also, interestingly, there's nothing special. There's no reporting requirements on that, right? So
Other than Schedule E, right? It just can go on Schedule E. There's no additional forms. There's no FBAR. There's no 8938 for real estate you own in your own name.
That's what's interesting about it. So it's kind of a way to, do some financial and retirement planning, right out, and staying just right outside, what a lot of the problems are, right? So the real estate is the first thing, right? The second thing, on a more trivial level, but it works, would be, just anything that's sort of straight interest, right? Straight interest bearing. I mean, I would agree. I'm not trying to pass that stuff off as a great investment, okay? But it can work. But it works particularly well, if you have some kind of tax favored account that the U.S. would recognize, and it doesn't. But that's the second thing, right? And the third thing that Americans abroad can invest in safely are individual shares of companies, right? They're that are publicly traded.
Right. Yes.
Okay, that are publicly traded. On the, I don't know, it's early in the morning for me, so I'll say the Toronto Stock Exchange or the New York, this sort of stuff, right? So that's, kind of the side that you're on. At least I think the side that Michael is on. And, I think it's probably, I'm guessing a combination of accident and design. Design in the sense that, give me the impression of a guy who, thinks about what you're doing and stuff. Most of the time anyway, which is about as good as it gets, I think. An accident because I I don't know tons and tons about Argentina, but my impression of it is that it's not. It's sort of unstable in a lot of ways, right?
That's putting it kindly.
Well, I'm a kind person, or at least I try to be. And that's not the type of environment that would, generally be an attractive place for, mutual funds and this sort of stuff. Right now, on the other side, right? So we have Michael's situation, and my impression is, I mean, I follow all these people on Twitter, who are sort of talking about South America as a plan B option. Would that be the phrase? I mean, I get the impression that, that's more or less how they see the world, largely because that's how you have to see the world, sort of thing. I mean, these are, undeveloped markets, which is not a bad thing. Okay, I'm not trying to pass these first world democracy situations off as good. I think they're, highly overregulated. But, the situation contrasts quite dramatically with sort of a middle class, American who lives in, we'll say Canada, country I know best, or the UK, and that, where the tax system itself is necessarily a much bigger driver of financial and retirement planning. I mean, it's a lot harder to stay out of it, because of the complexity of the tax code and stuff.
Yeah, I think one big difference, and it's kind of an elephant in the room, between Latin America and some other markets, exchange rates, cost of living, exchange rates. Like, that's a huge difference on there that gives someone a lot more breathing room, I think.
Well, making it so, I mean, I infer from what you're saying that it can be very, very attractive for North Americans to be in those places, right? I mean,
well, even beyond that, so if we just think of a glass of water as what your income is, and a portion of that's going to go out in taxes in the country that you're in, and another portion is going to go out in taxes as far as back to the U.S. or anything. Whatever's left in that glass is going to stretch a hell of a lot larger, or a hell of a lot farther in Latin America or in a country with favorable.
Which is why.
World.
Which is why we have, on the one hand, we have a lot of, sort of younger people exploring opportunities in Latin America, and a lot of older people, retiring to places like that.
Costa Rica, Ecuador, Uruguay, really common for people.
Although I was in Uruguay a while ago, and I thought that was really expensive. But anyway, that was maybe.
No, Uruguay's expensive as a country here. It's expensive as a country. Yeah.
Okay. But that's interesting because we look at this from the perspective of somebody who makes their money in the U.S. or Canada or the U.K. or something like that, right? And then all of a sudden they find out that, wow, this retirement income isn't going anywhere near as far as I thought it could. And they kind of look out and they say, well, geez, if I go to somewhere in South America, that glass of water takes a longer time to drain. And that works, right? But it works primarily because their center of financial gravity still remains in the United States, right? Or whatever, right? I mean, they're not having to plan their life out, in accordance with a highly complex, tax system, that's really sort of a life code, right? And the other thing that I find very interesting, and I sort of expected from this, was your comment about, the 120,000 floor on the income, the foreign earned income exclusion, right? So, it's very, very interesting that as long as you're somebody who doesn't have financial entanglements in the country that you're living in. I mean, there are people who, I don't think this would be you, Michael. I don't think there's anything wrong with this necessarily either, right? But there are people who manage to use that foreign earned income exclusion to pay zero tax anywhere. depending on how long they stay in these other countries, right? And this is quite an amazing thing. So, Keith's point here, and I would certainly agree with him and support this, is that the problem is not so much living out of the United States, being subject to the U.S. tax system, although I don't think people should be at all. The problem is the extent to which their financial center of gravity is in other countries, right? And, this is you have real estate in other countries, but that's not the type of thing that creates the problem, right? The thing that creates the problem would be tax favored accounts in other countries, any attempts to invest in, mutual funds or pool of funds of any type.
Yeah, well, John, and I think here's a great question here, right on, because here's a question. Because Michael, you're getting your income from a Florida LLC, right?
Mhm.
Basically. Now, are you a contractor or a W-2 employee?
Contractor.
Okay. So you're you're self-employed by a U.S. company. Now, what would happen if you were self-employed but your income came from Argentina? And that would depend on a lot of things. You could still be taxed as a sole proprietorship overseas. But oftentimes what happens is that, and because in some countries you're mandated to do this, is that you have to have a limited liability entity. Now, what happens, what the IRS does is that's like, oh, you have a limited liability entity. Well, clearly you're a large multinational corporation. Therefore, we're going to require this incredibly onerous form that was never intended for you, but we're just going to make the rules apply to you. So now you have to file this massive form 5471 and its various schedules, which get out of control very quickly. If it's a real company doing real business, and God forbid you have an inventory, it can get out of control very quickly. Do you agree with me on that? Do you agree with me on that? That if you're like, yeah, I could see if it was my own company that I owned, limited liability entity in Argentina that had employees, that was doing all these things, that was really running, that I might have a different situation here that would be a little bit more complicated.
Oh yeah, it would absolutely be more complicated. So for example, Argentina. For the Argentine tax system is ridiculous, by the way. I think if you actually do them. So my father-in-law, he is a business owner down here, and he probably pays about 70 cents on everything, 70 cents on the dollar, just to translate, for everything that he comes in, goes out in taxes.
Wow.
It's ridiculous.
Wow. Right. And so and then oftentimes, that you have these situations where you're paying a high tax in country, but that doesn't necessarily mean the U.S. is done with you.
Nope. U.S. would still definitely come and do those kinds of things.
See wherever they can get. So, and I think this is I think the point that we're getting to, and we've commented on this before, and unfortunately, and I think this is one of the dynamics going on, is that U.S. expats do not have a similar experience overseas, because you could be a U.S. retiree and be wondering why everyone's saying it's difficult to do tax compliance, because things are coming overseas and you're just taking advantage, and oftentimes you're taking advantage of the foreign earned income exclusion. The other thing too is, for a lot of digital nomads who are getting their income sourced from outside the U.S. also are saying, why is this a bad deal? We get the foreign income exclusion. And I think, what would be, so I think what would be great today is, as we go along, is just sort of, here's the things that could change your situation drastically, where you could be, now one of these people pulling their hair out of their head, trying to figure out, how do I get in compliance with this? I'm reading differing opinions from people who seem pretty smart. One person says, you got to do it this way. You're going to, you got to spend this amount of money to get it done this way, right? This person says you don't, you can just do this. So I think that's one of the things that would do it for you is, and I think I think this is the comment. The totalization agreement, the income is coming in from the U.S. because this is something you would have to deal with if you were actually self-employed and the income was coming from Argentina. Is you'd have to now look to the totalization agreement
And
to
I don't
see.
think
Well,
there is one, Anthony, with Argentina.
there,
if I'm not
yeah, I don't think
mistaken.
there is one. So there isn't one. So in Argentina, you could be double taxed on that you could be double taxed because there's no totalization agreement. Social charges, which can be social charges, which you can get tax credits for, you can't because there's no totalization agreement. So that's one thing right there that gets, I think fair with self-employment. Big issue there. If self-employed in Argentina, either way, there's a missing totalization agreement, and then if you're in an entity, you would have an onerous filing form of 5471. And now this is the thing too. I would say about that, how the IRS processes those is very, very different depending on who the filer is. If you're a small little self-employed person who basically has their LLC overseas, a plumber in Germany is always the example I use. The IRS, if you don't do it right, the IRS gives you one penalty regime, and they penalize you the hardest. And then I could tell you the same exact appeals officer, if your client you're representing is a large corporation with multiple assets and many lawyers on team, they'll give you a much different, much more relaxed penalty structure. And so that's one thing that happens with this is that when you do have to do it, it's like, well, now, and I think maybe this is where a lot of my passion comes from, is like, okay, you think this is fair, you think that this is helping the small people. Let me tell you, it does the exact opposite. Now the confusion, of course, is that many people who we would consider small, no offense, you're a great guy, but you're not a large multinational corporation. The problem is that these problems are put onto you with the few triggers. But if you don't have that trigger, you could be going along and saying, what's the problem? So what I'm hoping that we could maybe do today is like, well, here's the things that could create a huge problem for you down the road, and maybe give you sort of like, here, don't do that. Yeah. And so the self-employment is a huge problem for many people. Differently, a few different things change for you, and oh boy, we have a huge problem.
I'd like to add another, if I may interject.
Yeah, go ahead, Keith.
Second. I'd like to add another element. Now, you kind of use myself as an example, okay? So I'm French and I'm American, all right? And let's say based in Paris, all right? And there is an array of financial products that, as a Frenchman, I can invest in to, I don't know how you say in English, but for defiscalization, to bring down my tax burden in France, okay? And that's what French people do. However, because I'm American, okay, I don't have, and forgive me, Michael, but I'm going to use this word, I don't have the freedom to be able to invest in those financial products. Why? Because they are not recognized by the IRS. And so therefore, they're not recognized as tax-deferred financial products. So I'm actually doubly taxed on those products if I invest in them. So I can't live my life in France like anybody else for any other expat, or as a Frenchman in France because of that. So I'm kind of in a quandary and stuck on what do I do to invest where I live, because that's where my financial center of gravity is in France. So that's also another element that's a problem.
So can I ask?
I totally get that. Like you are not going to hear me come out in favor of taxation. So I think there are multiple pieces of what this conversation is, right? One thing is approaching this as a realist, which I typically tend to be a realist. The current systems in place are these. You know that when you go and do this. When you go and do things, you have options at your disposal, and you know what the constraints are within which you are working. Now, if someone were to go and change those and make it so that it isn't citizenship-based taxation, it is residency-based taxation, phenomenal. I would be even happier, right? But that would be a realist perspective on things. Until that happens, we have to work within what is there. As far as pushing and trying to remove that area, I agree. I think it's stupid to have citizenship-based taxation. Like, I'm actually not against that. what my position is that when you say you aren't free, that's not necessarily true. You have options. It's just whether or not you're willing to pay those consequences or not. Like, that's
all right. So you're all
that's
right.
ultimately what
Okay.
it comes down to right now is you have options at your disposal. Are you willing to pay the consequences or not? If you're not, that's fine, but then you can't then complain about that, or you have to go and try and work and advocate to get whatever those barriers are so you can then come back and do it. But in the meantime, it's a moot point to try and complain about that. I would agree with you about moving to residency-based taxation versus citizenship-based taxation, but like that's actually not a point in disagreement between us.
Interesting. Okay. So, and I think this is where the conversation might get very interesting because we're talking about freedom. We talk about freedom and liberty and all these concepts of things, and something you mentioned and before is like, well, look, you have the freedom of movement. If hey, look, if this system gets, if the U.S. tax system gets so bad for you, you can just renounce. Right. And it's like, okay, well, that's an interest. And it's like, okay, but what we're saying there is like, well, you're not, that doesn't sound like freedom. That to me, it's like, if the system is so bad, you have to renounce. And by the way, it's bad on renouncing too. Then that doesn't seem to me, wait a second. That seems to me that the tax system would be out of control.
But those are two separate things. Like the tax system and the quality of the tax system and freedom are completely separate. The fact that you have a choice at your disposal means that there is a degree of freedom there for you. If it were, let's say that the U.S. passed a law tomorrow that said it's impossible to renounce or dispense with your U.S. citizenship once acquired, then we'd have a conversation.
Well, they're making it hard. I mean, they do make it hard.
They do make it very difficult.
That it's difficult doesn't mean that it's impossible. Like if they were to pass in hey, you were born with it, you got it, no take backsies, right? If they were to do that, then we would have a conversation on that. And I think you would actually, have a stronger point at that level. But that's not the case. Again, approaching this from realism and just approaching this from costs, benefits, trade-offs. What are you willing to pay? What price are you willing to pay for X, Y, Z? That's really the basis of kind of what formed that exchange on Twitter that got this all, on X that got this all started, right?
Okay. All right. So, and I want to, and again, I want to focus on where we actually disagree or where we have a different perspective. So, hey, great news. We agree. Hey, move to residency-based taxation. Yeah, that'd make a lot of sense. But you seem to be, again, you're realist, and you're like, well, look, if you have choices, and if you're opting to be in the U.S., you're exercising a choice, and so therefore, you have a level of freedom. And then I think that's where I would disagree with you. It's like, well, I don't think so, because taking away options from people isn't freedom. To say, well, here, we've taken away all these other options for you, and now, okay, now that you've taken away these options, I'll guess I'll do this thing. Well, that's not really free choice. That it's not really free choice. And now, and I think this might be your problem. I'm going to just get to it. I'm going to tell you what your problem is.
Sure.
You're too smart. You're too smart.
That wouldn't be the first time I've heard.
And this is one of the things is your perspective is this. You're going for a PhD, a doctorate in finance. Yep. Is that correct? Exactly. Or sorry, finance. Let me pronounce it correctly.
Finances.
Yeah, you're going to go for a doctorate in finance, and so this is where, I'm listening to you, and this is just something to keep in mind. And this is where, we say, what are we really dealing with the IRS? Well, just consider this: if you copy and paste the IRS form 1040 instructions, not even any of the expat stuff, just the basic 1040 instructions. If you copy and paste that and put that into an online reading comprehension level detector, okay, what's going to return is that the IRS form 1040 instructions, which are the simplest, most basic form that applies to everybody, is written to the 9th to 11th grade levels, depending on your scoring mechanism, the 9th to 11th grade level. And then you'll read something like this, which will put the fear of God in you and shock you and amaze you, that the average reading comprehension of the adult in the United States is that of the 6th grade level.
I actually figured it would be lower, but
that's just assuming you have their attention, right? There's a lot more going into reading comprehension than just being able to read something, but to know to read it, right? You got to know to read it, right? So assuming you know to read it, you read it, there's a great chance that when we look at our tax code, more than half the people will never understand it, can never understand it. And now the problem is that, smart guys come along and say, see, it's not all that hard. But I think one of the things we have to look at is like, well, wait a second. We're passing, we have these laws that more than half of Americans can't understand, whatsoever. So that's the point where I say, well, I don't know if we have really a choice. Now, maybe you'd say, well, maybe I have a choice, maybe you don't. But do you see my point here of that we don't have informed consent?
I totally get your position. Let me just repeat back the position you have just to make sure that I'm getting it right. So if I'm understanding your point correctly, one might not have a choice in this case because one doesn't really understand the world in which they're navigating. If they don't understand the world in which they're navigating, then how can they possibly see what the options are they have?
Yeah, there you go. Thank you very much. Thank you.
Okay. So assuming that is the basis that we are going off of, that still doesn't mean that people don't have choices or that they aren't free. That means that the tax system is convoluted, which I agree with. Like, if you wanted to ask me, like, hey, Mike, what would your ideal scenario be? It would be exactly what I would propose here in Argentina. I would say move away from all income tax, go to consumption-based value-added tax, have that consumption-based value-added tax be distributed between local, state, and federal, have the greatest preponderance of it go to the local, next greatest preponderance go to state, and then have the next go to the federal. Limit things down to that, and then try and push as much as you can down to the local levels to manage and do government that way. Like, I would honestly say that is probably the simplest way to do it. Argentina has a 21% BAT, by the way. So 21% basically is where everything falls on what tax revenue is as a percentage of GDP anyway. So I would really push for something more along those lines. Now, people would argue probably that it's regressive because you're taxing consumption. So on the poorest, you're charging a higher percentage of what their income is. And that's a valid argument on there. But at the same time, you're going to end up getting more in revenue. You're going to get more services. You're going to bring more things in. You're going to increase what the overall tax collection is. And assuming the government actually uses it well, which is not a small assumption, that would actually, come back and over time iterate and, help alleviate, I think, a lot of the challenges that we have, assuming that there are challenges that can be alleviated through government intervention and don't require more of a cultural shift and more people taking responsibility and onus for the things they do at an individual level. So I don't think that I don't think it's actually an equivalence to bring tax complexity to the question of freedom. Like, the recognition of something does not negate the existence of something.
But Michael, does the non-recognition or the inability to understand their options, does that impact it at all? In other words, you got to, let's say you have a bunch of people in a room. They all believe they're locked in the room. They completely believe they're locked in the room. And at the end, there's a small door, papered over. Nobody knows it's there. If they knew it was there, all they'd have to do is walk out. Those people free to leave or not?
Well, that's a very good question. It actually goes, I think, a lot to even what C.S. Lewis said, that hell is locked from the inside.
Okay.
Right?
So I think what Anthony is saying here, right, is that the problem is largely a complete inability for people to see their options, understand their options, or even find advisors who are aware of the options. Sort of a
and that's probably by design as well, right? The same thing, technical jargon.
If you want
to sound like you know what you're talking about, say things that sound complicated, right? And make people think that you know what you're talking about.
But you're not walking around in a world where what is going on in somebody's head is, I find and I wouldn't even call these tax laws. I would call them rules for life management, right? That are imposed from, abroad, because that's what a modern tax code is. But, so they're walking around saying, well, I see these rules, or I see that there are rules that I can't understand, which I think is more accurate. maybe there's a way out, but I'll be damned if I can find anybody to show me where the door is. Only way that I can see to do this is maybe to renounce my citizenship. You'd call that freedom?
If there's a choice there that you can take, there is a degree of freedom there. Now,
you can't understand or don't know the choice. The choice are hidden from you.
Yeah, I think that there still is freedom in that. So let's take a couple of steps on this, right? One, I'm going to do this from the perspective of what I really believe here, but two, I'm going to come from the perspective of average every day, so we can avoid the hey.
Well, let's go from the perspective of average every day, because I mean that's what matters. Okay.
Yeah, exactly. So
we're on this call. We have a better understanding of this. So let's put ourselves in the position of people who don't.
Yeah. So the average everyday person is going to navigate based on what they see, what they understand, what they do, and they're going to construct the landscape that they move through life in based on that. Right?
Yeah.
So to that, then we start getting to the perception of, is the average everyday person actually even conscious that this is a problem and that they're trying to find something outside of that as well? And I don't know if that's the case.
There are a considerable number who see this as a problem.
Great. And so if that's the case, then again, I think that the fact that the average everyday person has the ability to wield political power in order to try to move things in a direction that they choose still gives a degree of freedom. It is displaced over time, of course. It is absolutely displaced over time.
Hey,
but
Michael,
that is still a very big piece of where this comes from. You can absolutely choose to advocate. Like I said with Keith, we actually don't have a disagreement on residency versus citizenship.
I've nobody.
We totally get that. I would support Keith. I would absolutely help push him and advocate for those kinds of things, right? But there's the other part of this. If someone is so interested in solving this or simplifying, they have degrees of freedom in action that they can take to push that and simplify if they so choose.
For example,
it's not direct. It's a question of whether or not they're going to pay the consequences on that, or whether or not they're going to pay the price on that instead of saying consequences. But it's a question of trade-offs. It's a question of what they're going to do there. Again, I don't. So one, taxation and freedom is a ludicrous, I think, basis to form anything off of. And two, if we then look at taxation as a form of limiting behaviors, we have limiting behaviors from all other areas as well that we look at. So why specifically is this area? Is the area here because it's extractive? Is the area here because we find illegitimate the areas in which that money is being done, or we don't agree with where money is being done? Like, we can talk about all those different kinds of areas. But if we already accept limitations, and there's myriad limitations that we have that are imposed on us externally all the time. Like, I think even in the thread that got this all started, I said absolute freedom doesn't exist. Yeah. And for some reason that then turned me into being a statist, that turned me into being a communist, that turned me into all kinds of things that people want to say.
But those are just ad hominem attacks, and that doesn't.
Yeah, exactly. Like, it was ridiculous.
But if I may interject in regards to freedom, so I'll give another example, is that FATCA, the Foreign Account Tax Compliance Act, which is one of the tentacles of the U.S. practice of citizenship-based taxation. So again, I'll use France as an example. For me, I am limited in the financial institutions in France where I can have an account. I'm shut out of many foreign financial institutions because I am a U.S. citizen. I cannot even access those institutions, and there are financial products that I cannot access in France as well. And when I look at myself as compared to other French people who are just French in France, or let's say a German expat or a Japanese expat living in France, they have a lot more choices and a lot more freedom to financially to be able to plan for the future than I do, because I'm shut out of many opportunities there. So for me, that is a lack of freedom as a result of being a U.S. citizen in France.
I don't think Michael would see that as a lack of freedom. I think he would probably see that as, perhaps a burden. but because you have the option of removing yourself from the application of that burdensome law, you're free, I think, right?
That's one piece of it. And then another piece I think is, again, if the argument here is, hey, the U.S. tax system is burdensome and creates a lot more hindrances than other countries have to deal with, yes, it does. I agree. But there's still a certain space. There's a space in which you have options, and you can still navigate those options. You have some that are outside of that bounded area because of the tax.
So I have,
Mike,
but
yeah.
I have space, so I have limited freedom.
I'm sorry, I didn't hear it. Sorry.
Oh, sorry. So within that space, okay, I hear you, but I have limited freedom as compared to my compatriots in France.
Yeah, absolutely.
I have to work in a small space because of being a U.S. citizen. So therefore, I am not free to choose in France what banks I can bank at, where a French person, just a French person, has the freedom and the choices that are quite wide. But for me, I'm in a box.
Right. I mean, so, and then to John, what he said, yes, I mean, you have the option at your disposal to dispense with what that boundary is if you so chose. But you do have a list of options. You have a smaller list, but you have a list of options in which you can choose. For example, even in the US, normal people every single day, there are investment options and vehicles that are outside of their domain. Why? Because there is such a thing as an accredited investor. Accredited investors can get into things that other people can't. If I decide tomorrow that I want to be a VC, or I want to start doing angel investing, or I want to be a seed investor, if I want to take advantage of a safe vehicle or anything like that, I'm going to need to be able to show that I'm an accredited investor for that to have any kind of protections.
Oh, I get that. I get that. That makes sense.
I think, and I just want, because we got some great comments, and I want to get to some comments. We got some great comments I want to get to.
Okay.
But this is what this is what I'm gonna go with here is that, if your options are removed, it's like, hey, okay, there's let's just say the abstract world of freedom, right? Whatever that is, right? But options are removed from that, and now you're left to two decisions: do this or do that. Would you say the remaining? Because this is what it sounds like. You're equivocating choice with freedom. We always could choose the worst. We always could choose the least worst alternative. But is that something? And I guess freedom is such an abstract term, whatever that means. I don't even know what that means exactly. So I guess I think we're agreeing to a definition of it for purposes of this. But that's, I think, to me, the point is like, but if your options keep getting removed, and you're left with this or that, renounce or don't. Well, see, you have freedom. In my mind, like, no, the reason why you're forced to renounce is because the options and I think this is the point about expat taxations. We know, and this is a comment here. I got to get to this right now. The average person does not have political power. The American people did not decide that the two best representative nations are 80-year-old men with cognitive decline. Political insiders did. And I would say this, the average person has no political power, and it's even worse for US expats because while these laws aren't impacting you, right now they don't seem to be impacting you, the laws that have been passed, all the laws that have been passed, every time Congress is looking for a revenue offset, they always look for these revenue offsets. We'll just hammer US expats with this tax law that will hammer them hard. And so why do they choose to hammer US expats? Because precisely there is no political representation. The way their votes are, they're all diluted across every district, and they're given no voice. Democrats have voted broad. They just say, hey, vote for us. We're going to continue to give you nothing, but maybe a promise someday that we'll promise you something. But vote for us anyway, even though we're the ones who passed all these laws that you can't stand. Republicans basically, sit on their hands, and then randomly will pass a law that impacts US expats terribly, like the transition tax in 2017. These things are, and by the way, that transition tax didn't hit the corporate donors as hard, though. You wouldn't believe that, right? And so,
you mean politicians giving corporate donors a break? Never. That would never.
Right?
Happen.
Yeah. Imagine. So, and I think so. That's really the point. Is that there is. I think one thing where I'm at is the political process is totally broken, and it's intentionally broken. It's totally and intentionally broken. So whatever choices we're given right now aren't our choices.
Yeah.
And that there's also yeah, go ahead, John.
Yeah, listen, I've got to leave in a minute. I've got a meeting. I just wanted to, first of all, I wanted to thank you, Michael, for participating in the conversation. But secondly, I just wanted to ask you a couple of questions, and I've got to go in a minute. So just, the briefer, the better. Okay.
Mhm.
But what about people who can't afford the fee to renounce U.S. citizenship? What would be your answer there? Do they have a choice?
I would be curious as to what brought them or how they got overseas.
Well,
Well,
wait a
what
minute.
if
Well,
they're
not everybody goes overseas, Mike.
parents
Yeah.
in a poor
That's
country?
the thing.
I'm sorry, I
What
couldn't
if
hear
they're
you.
born overseas to American parents in a country whose currency doesn't compare very favorably to the U.S. dollar? Just assuming the truth of that situation, they can't afford the fee to renounce. Are they free? Do you still regard them as having a choice? I'm not going to use the word free.
Actually, I would say that's actually a better argument. That's a better case scenario to build this off of. I think
Okay.
that one
Second-
is probably a better choice to say if they don't.
Question, because I'm sorry, I've just got to go, but I'm just
Mhm.
curious what your answers are. What would be, you talk about, well, we've got the rules, and as long as you have a way of being aware of the rules, okay? You have a way of being aware of the rules. You have at least logically a mechanism to work around them. What I want to ask is, what would be your view of retroactive taxation?
I think it's ludicrous. I think it's the same thing as retroactively trying to go after someone for a crime.
Okay, because last suggestion I want to make, and maybe after I leave, you can carry on the discussion. But something like the transition tax, which is very real. Okay, was 31 years of retroactive taxation on people living outside the United States. How in the world can somebody plan around that? A law that doesn't even exist, right?
Yeah, you can't. I mean,
Okay.
if you want the honest answer, you can't.
Okay. So would you have a choice in that sense to avoid?
No, you wouldn't.
Yeah.
No, you
Okay.
wouldn't.
Okay.
Well, I mean, the choice would be if you try to avoid it and bet on the IRS trying to come after you or not. I think that's the other area. That's
Okay.
Okay.
Anyway,
All right.
sorry, I've got to go. That's the only reason I'm not
All right.
interrupted.
Okay, John.
Thank you
All
very
right,
much.
we'll take it. Thank you, John.
Thank you.
I look forward
Yeah.
to seeing the rest of the conversation. Thank you, Michael. Great to meet you.
Yeah.
Okay.
You too, John.
Right on.
Mike, I just wanted to make one statement, if I may, and correct me if I'm wrong, Michael, on
Mhm.
this. And this is just what I've gleaned. And so I have the impression, and again, correct me if I'm wrong, that Americans overseas made the choice to move overseas.
Yep.
Because there are Americans who have never lived in the United States, and there are Americans, like accidental Americans, who left in diapers with their non-American parents. So they did not have the choice. So there is a large segment of the American overseas population who did not have that choice to move overseas. You see what I mean? So
Yeah.
there are many different subpopulations of
Now, this is
Americans
out of ignorance on
overseas.
my side. Are those populations also subject to the citizenship, the
They
global
are.
citizenship taxation?
are.
Yeah, I think that sucks. I don't think that makes any sense at all. I agree wholeheartedly. Like that should not.
Yeah, and I just
shouldn't
want
be
to
a
make that
case.
clarification because, and forgive me, because I don't want this to come across as insulting. That is not my intent. But there are a lot of Americans who don't have an understanding of what I just said. That not all Americans make the choice of leaving the United States. So it's just by a fact of life.
No, it's a great clarification. I mean, I was operating under the assumption that we're talking about people born in the U.S. who make the conscious choice to move outside, and that's the limiting factor on there. Yeah, absolutely. In those cases where one, it's something that person didn't make that choice, and two, you could absolutely find yourself in a situation where economically you are precluded from being able to dispense with that. Yeah, that sucks, and you don't have that degree of freedom at your disposal to be able to dispense with it.
And I just want to jump in with this. The fee to renounce is still $2,300, $500, and the courts have demanded that this fee would be reduced, but for some reason the government can't quite do it. Right, Keith?
They'll get around to it as soon as they figure out how to.
But
they'll get right on
it.
Right?
One had the. And I'm sorry, I'm going to use the word freedom. One had the quote unquote freedom when the renunciation fee was zero. and it
Mhm.
wasn't that long ago to be able to make that choice. Then it jumped to $450. Okay. And then it jumped to $2,350, which for many people, that's more than their take home pay in 1 month.
Yeah,
Yeah.
easy to hit.
Easily.
Yeah. That's so
Yeah.
it's just something that's not doable. I mean, I think we've had a great conversation, and
Yes.
we are wrapping
Yes.
up on time, and this is where I think I did follow you on Twitter, Michael,
Awesome.
and I
Thank you,
really
bud.
appreciate it. I really appreciate this conversation, and I think we're getting to I think we're uncovering the debate that, well, what counts as freedom, and I'm not saying this is you, and we're not, but like, here's a comment here, which of your hands do you cut off, right? Hey, you have your choice, right? Again, I don't want to attribute that to you, but we have a situation where, and I think this is where does are these tax codes all for our benefit, right? Or is this for our benefit, or whose
No,
benefit is this
absolutely not.
for, right?
Absolutely not. Like, I think we all agree on that. None of us like taxes. I think we all agree on
Well,
that.
And-
especially none of us like paying taxes to a country we don't even live in.
Yeah, a
we
country,
obviously have
and
to pay
you're
taxes
right,
how we live.
right, when you're not getting the services, and that's where it gets so much. We are out of time, but Michael, again, I want to continue, and what I'm hoping to do is actually red pill you a little bit. I'll be honest. I'm trying to just sort of introduce you to some things here. It's like, wait a second, take a look at it. And I hopefully, and maybe even this channel could be part of your red pilling moment. I do want to, because there's a lot of things, a lot of surprises you find out along the way that make you, question the nature of our country. That, of course, I mean, look, and America this is how full of it we are. This is how full of it Americans are, that we actually believe in an American exceptionalism. We actually will say that. We'll actually say, well, we're better than everybody else, so that's why we're going to do it this way. And we're better, I say, at onerous taxation than anybody else. That I would give. But the question, understanding the real role of our government, and the real role of international taxation, and the other part of the equation too, because while we're talking about the taxes, the U.S. tax code decides what dollars are destroyed, right? And so that's only one half of the equation. There's another half of the equation that destroys the freedom that we have, and that's the legal counterfeiting of money that the Federal Reserve does. Then they hand that money to Congress to hand out to their friends. And so when we just talk about the how they destroy the dollars, that's just one half of it, and that's why you can't get too about that, because there's a totally other on the other side too. And keeping it all in perspective, like, well, why are our choices, why are our financial choices always limited? And there's always somebody else who seems to be making out of this, that none of these things, and again, like, I was mentioning, the Foreign Tax Compliance Act, something that the claimed author of the bill really wasn't familiar with. That's an interesting thing. But you ask yourself, what is the constituency? Where is this constituency of people who demanded Congress, this, and as we say, a grassroots effort? Where was this grassroots effort to say, you know what we need? We need penalties on people who have foreign accounts, and we're going to penalize them harder, and all these other penalties. And they don't really exist. We all can say that, you know what, there is no grassroots here. Where are these laws coming from? And from Elise Bean and FATCA, what we can say, it's not, they don't want us to know where they're coming from, wherever it is, because she is not the author of that bill. Whatever her involvement is, I don't know. Maybe she signed on it. She didn't even read it ahead of time, or she had a hard time reading it ahead of time because she didn't know what it said. So we have to say, where are these laws truly coming from? And now, where I find it most interesting, and I think what captivates me about tax is that is where the rubber hits the road the most for the typical person. Your tax laws are life laws, and we're told that this country was founded on the idea of tax liberty. Yet very quickly, the first law, law passed, the first bill signed into law by President George Washington was the excise tax of 1791, which specifically and intentionally impacted those in rural parts of the country far worse than the Eastern interest, which paid for the Revolutionary War. That is, from the very onset of this country, it's been a corporation. That corporate interests have been valued over the individuals. And I think that's the point that I'm trying to make, in this channel, is to educate everybody about, well, what is this really about? Because none of us asked for this. None of us, who would ever be, hey, yes, I want to sign up for this. What is it? Oh, well, if you don't file this form, which is difficult to understand, we could take half your wealth. Actually, we could do that multiple times. No reasonable person would come up with this. So I think it's really just, what is the way out of this? And the political process doesn't seem like it's the way out, because this is all we get, right?
Yeah, I mean, that might be a little bit too macabre for me to sign on to it. I think you just have to get enough energy and enough people sharing that are motivated to actually go and try and do that. And over time, you will replace, and you'll start being able to, I think, push.
All right. Well, can we count on you, someone to support a move to residency-based taxation?
Oh, absolutely. I think I said that from the very beginning.
From the beginning. All right. Well, no. You're supposed to say no. That way I could act like I did something.
Right.
You're kind of taking my thunder away.
If this is a big thing for you, which obviously it is, you should really, I think, do a segment on what the impact of the petrodollar agreement with Saudi Arabia falling and how that's going to end up impacting taxation and money debasement.
Well, I think what your point being too is that, look, the U.S. is and this is what I would say: the U.S. government is the only government in the world that practices worldwide tax jurisdiction. And yes, there might be a third world country that claims it, but they don't. So the U.S. is the only one, and the U.S. is the only country that claims to have the reserve currency of the world, and that's not a coincidence. So I do agree that there's some changes coming up that we're not thinking will have huge impacts. But I agree with you.
That's actually the basis of what my thesis is.
I'm sorry, what was that? Oh, is that right?
Yeah, the basis of my thesis is about the risk-free rate as a construction. Historically, when financial mathematics came about, U.S. was clearly the hegemony. We're talking about the 1950s when Markowitz came out. And so the U.S. 10-year, the U.S. 5-year, those kinds of treasury instruments are what you typically look at. But that assumes a single solitary, reserve currency, when in the world today, we are moving to multi-currency systems. And so the way you calculate a risk-free rate should be the same, whether there's one, multiple, et cetera. And that's really what I'm driving over towards.
Well, all right. Well, I don't know. We might have to have you on again for that.
Yeah, happy to. This was fun.
All right, great. All right, thank you so much. I do want to just give a thank you. I want to thank Keith so much. We do have to hop off. I want to thank Keith so much for joining us today. And if you are wondering what you should do, your tax situation is a little bit more complicated than Michael's, and you're wondering what to do. And you're not sure if you should enter into the U.S. tax system, as it were, or if you should renounce, or if you should enter a streamline. You know what? Keith Redman, he talks to people, tell you that reality on the ground, what people are actually doing, what your risk profile is. He's not a U.S. attorney. He's not any tax professional. He's just a guy. He's the advocate too, and consulate too for Americans abroad.
He's been intimately involved in this for 15 years.
And Keith is the one who brought, who brought a lot of us together, and is really responsible for a lot of the fantastic content on this channel. I really thank him a lot for over the years for all his help. So you can reach him at US_overseas_advocate@outlook.com. And myself, I just will give a shout out here. I do want to, I am at Thaveau and Partners, just joined last month, but you can still reach us at irsmedic.com. If you do have an international issue you want to get to, even tax filing, we do that. Just go to irsmedic.com/offshore. We get you going. And
John, we should talk about what.
John, yes. And if you are, we can't leave our main man, John. If you are thinking about renouncing, there is no one finer than John. You could reach him at citizenshipsolutions@protonmail.com. So fantastic. I want to thank, we had a lot of great comments today. Oh, and I did want to, I don't have quite time here, but this is just what I would say in closing. There was this, that RM here is just wondering here if you actually are in full tax compliance. Where's his comment there? He's thinking you might have some self-employment issues going on. I'll just leave that for now, but that was some great comments. And then this comment here, I think we could, renouncing your citizenship of birth just to avoid unconstitutional taxation is not freedom, right? I hope we could. Thank you, Borchell, for joining us today. Really appreciate that. And I guess what we have to look forward to is potentially this dissertation of yours, Michael. Sounds utterly fascinating.
Yeah.
And so now are you done with it? Where are you?
No, I'm in the process of it right now. So
all right. Well, we'll stay in touch.
Do what?
When do you think you'd be able to talk about it? How long?
Like how long until I can, or how long?
No. When would be a good time to discuss it?
Whenever you guys want. Like, this was fun. If it's this time you guys always do things, this is an easy time for me.
All right.
Argentina's an hour ahead right now. We'll be 2 hours ahead in the winter.
All right. This sounds all right. Fantastic. All right. Well, thanks so much.
Okay.
All right.
Michael, and thank you for coming on, Michael.
No, thanks for inviting me. This is fun.
Great. All right. This is Anthony Parent for Michael Scranton, Keith Redmond, and John Richardson. Thanks for watching.